Hello, everybody. Welcome back to Finance Agents Live. This is Finance Agents Live, show number 17. Rhoda?
Chip?
Cheers me. Come on. Boom. 17 shows.
Can you believe it?
Last show, I literally forgot the
cake?
number. Last show, I said it was 15 and it was 16. So I'm losing track. And that's a good thing, right? We're just getting sucked into working with you guys. Okay. So today, we're going to be talking about who I can hear myself. So you should... Sorry, we're having tech issues. I can hear myself talking to myself. You probably have a window open somewhere with the thing playing. All right, anyway, so today we're going to be talking about...
live.
Yeah, it's live. Always something interesting happens. Today we're going to be talking about... sorry, we got weird signals. Yeah, I mean, I know what we're going to be talking about, but what you guys never know is that when we're up here, there's usually people over there making weird signals or faces. Often it's Rhoda making crazy faces like the world is ending. And I don't know what's happening, and and Darren's doing it too.
Do that?
No, not right now.
My thinking
Some of the time you do, and I have no idea what the heck is happening, and I'm here. Anyway, so today we're going to be talking about who qualifies for a business loan from a bank. All right, and I am blessed to be joined today by Rhoda Flum, who is the head of our term loan division. And she's been running it with success for a long time, helping lots of people get funding. And it's an interesting process, and there's a lot of questions and a lot of reasons you might not qualify. A lot of reasons why you might go to your bank and qualify, and then it doesn't actually, you don't qualify at that bank, but you qualify at other banks. So there's a lot of different things, and Rhoda's going to be talking us through it. So there's three people that should be watching this show, right? If you're interested in getting a business loan from a bank, not one of the alternative lenders, but a full-term bank loan, we'll talk about what you need to qualify. If you were one of our finance agents and you want to know, why didn't my last guy get qualified for the term loan that he wants? Because everybody comes in wanting cheap, low-interest loans, and not everybody gets it. Then you're going to want to know. And if you're in our bankers marketing group and you're going around talking to the bankers, this is a good show for you to watch because we're going to be talking about the bank terms. We're going to be talking about all the reasons why somebody might go to that bank, get turned down, but still be qualified at other banks. We're going to go through all of this. So, again, Rhoda, thanks for being here.
You bet.
All right, so our sponsor for the day, Startup Vitamins. Our mug is complaining is not a strategy. Good thing to remember when you go to the banks, if you don't qualify, complaining is not a strategy. Complaining will not get you qualified at the bank. Complaining will get you nothing, all right? But if you come to us, maybe we can find a way around it. Or if you follow it, one of the most important messages I want to get across to people applying for a loan is, remember, just because your bank doesn't like you doesn't mean there aren't 20 other banks that would love you, all right? For example, a recent referral to us was someone who went to the bank and the bank loved him, but they just don't finance equipment, right? That's one that Rhoda's working on right now. Meanwhile, other people would be happy to fund them. So, all right. So first of all, we talk about bank loans. Internally, we call these BTL, business term loans, and we have a bunch of different terms for what is a term loan. So, Rhoda, hit it. What are some of the terms for a term loan?
Can we start over?
It's on the It's on the next slide. So if Darren could go to the next slide, because there's so many names, you're going to forget what they are. What are some of the names for term loans people might have?
Call them an SBA loan, a 7A, traditional funding, a bank loan. Sometimes they're called a secured loan. The SBA has a lot of different programs like the Community Advantage Loan, Express Loan. They have an import-export loan. So all of those fall under these traditional term loans. And then individual banks may have their own terminology for it, just a land loan or a real estate loan or anything like that. If it's not guaranteed by the SBA.
Basically, we're looking at fully amortized loans, which means there's a set term and the interest is spread over the entire term in a scaled rate, whatever, that doesn't matter. Generally, you're going to have fixed payments. Generally, the payments will be the same unless you have an adjustable rate. You got all sorts of different stuff. But we're looking at loans typically up to $5 million. There's a minimum on there. It really depends on what lender you go to. It's typically 50, 100. Some of the lenders won't do under 150K.
Right. Those community advantage loans are typically smaller. We did one for 50,000, but if you go to a more traditional SBA Express or the full 7A, then it's going to be 150 to 350, or excuse me, 150, 150,000, and then again there's a jump to 350 to 5 million. If you do an alternative term loan where you get the higher rates but shorter funding time, they'll go maybe 20 or 30,000, but it's a lot of work for even those smaller deals.
It's all over the place, right?
Yeah.
And so every bank is different. That's one of the reasons why you may go to your bank and they may turn you down, and 10 other banks may love you. Because you asked for a $200,000 loan, and there's some banks that say, we won't do an SBA loan below $350,000, right?
Right.
But we may have other banks that love it. So here's our first example. And darn it, I forgot to put a bell on there, because this is one that we funded. We'll be talking about the bells here in a second. I always forget to talk about it. Here it is. We love it. There, let's do this. Darren, put it up there. All right. This is a deal that we funded in the office whenever we fund a deal, especially term loans, because we put a lot into these babies. We ring a bell.
We ring a bell.
So if you're sending deals to us, hopefully, come on, let's ring it. And your shoes. It's always hard to get rid of a ring the bell. All right, so here is the first example. It's a doctor's office that we funded. This is one you worked on, right?
Mm-hmm.
Okay.
Yep.
So just under $1 million in funding. The rate was Wall Street Journal Prime plus 1.5, and at the time, Prime was, who knows what? It was around 6.25.
The end-up rate was like 6.25, but that'll fluctuate quarterly as they adjust Prime.
Quarterly. Okay. 25-year term, so it's a good, nice, long-term loan, and it took 6 months to fund. What the heck? Is that normal?
Yeah, it is. This one, like Tim said, different banks like different things, and this loan was particular because they had a third party working in their office, and it was an allergist, and this third party wasn't billing properly, and so then the insurance company, or if I remember correctly, went back and kind of did an audit, and the doctor owed the insurance company a lot of money. And so some lenders saw that as a fine or a lien against the business, whereas the lender we were working with was really just able to see that as regular business debt on the business debt schedule. And so we were able to structure the loan that way.
Okay, right, so that makes sense. So what we're talking about is, every business owner can get hosed a million different ways from Sunday, and we see them all in the term loan applications because they're so particular. And this guy had somebody doing the medical billing wrong, and the insurance came back and redid it and gave him a fine, and that was a problem. That was a big hurdle to overcome. How did he finally overcome that, by the way?
It's just having conversations with lenders, knowing how to approach it, and letting them know the hurdles in it before you take someone down this long road, saying this is what they have, this is what we're going to do. Are you comfortable listing that as business debt, or are you going to see that as a lien or a judgment or a fine? And having those backdoor conversations with them and making sure that the underwriter working the file is okay with it.
Okay.
They were okay with it because, like we said, that one was a 25 years, so there was also more security in that deal. They were financing some real estate, so they were able to get a little bit more collateral in it.
All right, we got interesting things going on in the comments right now. I think we have our first heckler. Awesome. John Casper, thank you for heckling me. I've never had a heckler before in a live show. Sweet. Okay.
You're really making it.
No, I mean, it's new, right? He's asking if we're here. We're definitely here. I think he posted something that has profanity because it's held for review. So whatever. Anyway, you're asking for $2.5 million, maybe, right? So here, I'm just going to interpret what I see here. Grand Canyon Vacation Rental Home. You either have a home or you have a rental website. If he needed $2.5 million, roughly, what would that look like? If he was looking to purchase a property, then how would that work? Let's start with that one.
Well, we'd want to see the equity that he has to put down on the property and the value of the property. And then we would need his personal tax.
How much would he have to put down?
10% of $2.5 million or the asking price.
Can you get a business loan to buy a rental property? You're going to rent out to people?
That's a good point.
That's an investment.
If he's an investment, and it also depends. We've done hotels. So how is he going to structure that? And that would be, again, talking to lenders to see how comfortable they are. Are they going to view this as an investment property, or would they see this more as a hotel or something like that?
Yeah, because I know if you're buying a business location building, you have to occupy at least 51% of the building. So, and this is, if it's a hotel, obviously you're not going to occupy the whole hotel. Have we done a hotel? I don't.
They do flag hotels.
Flag hotels. All right. Okay. Anyway, interesting. We'd be happy to talk to you, John, directly. If you want to, after the show, just let us know. We can get into more detail. Maybe you can be on a subsequent show. We can talk about your scenario. All right. So Travis is also asking. Hello, Christian, by the way. Travis is asking, what if you have a $35,000 chargeback from 2014 on your credit report with an Amex business card, and you've finally gotten back on your feet? What, if any, options for business loans in the range of $50K plus? Are you able to get a traditional business loan with an old chargeback on there? I'm assuming you haven't paid it off, but even if you have paid it off, I don't know if it's a big difference. I think it's going to be a big problem with bank financing. But are there alternative lenders that would help with that? Maybe non-bank term loans?
If it's one chargeback, and I also don't know how old his business is and how much it's cash flowing, or if he has anything to secure the loan. I have definitely worked with people who have challenged credit and structuring it in that way. So we'll get into those examples a little bit later, but
it'd be better if it's paid off, at least.
Yeah, right.
If you haven't paid it off, it's going to be real tough. Okay, great. Here's somebody else needs $150K for his proven software and online business. Great. If it's we don't have to ring every time.
Oh, well, you said you were going to put the bell on every time.
People can't even see the slide yet.
We don't know that.
We're getting the preview.
Okay. It's live, people.
Live.
It's a pleasure.
Anyway, proven software online business, that's definitely something that can be funded. Just got to have the time in business. We're going to go through some of the details on who does and does not qualify. All right, so here's our next example. It's a wholesale supplier with a beautiful truck, funding $57,000. Rate was 9.75% for a 5-year term. Now, to me, that says that it's not a bank term loan. This is a non-bank alternative lender term loan, right?
Yeah, this is one of the Community Advantage loans, and this guy also had challenged credit. That's why we went there. He lived in I forget it's called when your census tract is federally designated. Forget the name. But anyway, he worked in this one. It was cash flowing. The business was, I think, 3 or 4 years old, and we were able to get it. The trick about this one was that he was using 2 trucks to secure the loan, and he had both of the trucks were signed over, but the title hadn't arrived from the other state, so they were willing to fund part of the loan based on the truck that he had that were issued in this state, and then once the title came from the other state, they would fund the other part of the state. But again, his credit was below 650. He was just over leveraged, though. There was no late payments.
All right, so this guy wanted the money to buy that truck. Is that what you're saying?
He was doing it to expand for marketing, but he already owned both of the trucks free and clear.
All right, so that was the collateral. But the truck's is collateral. Okay, awesome. All right, and we funded that. That's why you see the little bell. When you see that bell, I don't want to ring it every time.
I do.
All right. Okay, well, you want to. When you see the bell, that means we funded that puppy. Okay, BTL. Let's talk about the minimum and ideal clients. And by the way, before we get into minimum and ideal, this is a very important concept for anybody when it comes to loans. Normally, when you go talk to any lender, they say, here's the minimums you need to qualify for a program. And this took me years to figure out. They would say this, and then we'd submit people that met the minimums, and none of them get funded. And I was like, all lenders are liars is what I was thinking. Why is everybody lying to me about what it actually takes to get funding? The reality is, if you're near the minimums, you're hardly fundable. And if you're near the minimums on one, you need to be higher on the other ones. So instead of just talking about the minimums, we'll put the minimums, we'll tell you what they are, but we also want to talk about an ideal client. This is what they actually want, not the minimum that they would ever do in a rare circumstance, because all these lenders, they put some crazy minimum. So for example, the FICO, right? Business term loans, in a minimum FICO of 660. But guess what? That is really hard to fund. You really need 700 plus and other things, right? So minimum FICO 660. I mean, we have some alternative lenders can sometimes go less than that. But you got to make up for it. You got to have good business. Don't come to me say, hey, I got a 661 and fund my startup. No, you need years of experience. So what we're looking at is a minimum of 660 FICO. There's no minimum time in business, but it's much harder to get a startup funded. Annual gross revenue is at least $150K. You can have a bankruptcy, but it needs to be discharged, and it says 3 years ago there. It needs to be longer. Ideally, no bankruptcy. Bankruptcies are hard. Judgments and liens, can't have them. Credit partner, no, you can't use somebody else unless, you can have two owners in the business, but both people have to have good credit. You can't have somebody with really bad credit and somebody with good credit and have it balance out. Secured, it's typically going to be secured by real estate if it's over 350. The industry is super important. That's some of the stuff we're going to talk about. The type of business you have is very important for what bank you go to and what type of loan you're going to qualify for. And funny amount, we have 20K on here, but really that's not likely. All right, so the ideals. Come to us with a 700 plus credit, 3 years in business, at least 250 grand in annual revenue, no bankruptcies, no liens, and alternative collateral with the right industry, and it's easy. That might sound like a lot, but there's a lot of people that fit that. And here's the other thing. You can fit all that and still not qualify for a number of reasons, and that's some of the more stuff we're going to be getting into. All right, anything you want to add to that? I mean, that's a lot, but anything you want to add to the minimums and ideals? Wasn't on there?
No, I think you did a great job.
Awesome. I love it. Okay. All right, now we're getting into documents. What are some of the documents you need in order to actually, when you go to the bank, they're going to ask for this, 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 and this. And we're going to start with a story of a funded client. Now, this one is one that just funded, so it's fresh in here. And it's a bit of a battle, right? So, I think you guys can learn a lot from the process by hearing about this one. So, give us the backstory. Two partners, right?
Two partners. One had strong credit with assets, and the other one, her credit was below 600.
Okay, so an exception to what I just said. I just said minimum was 660. So now we have a partner, one of the two partners with below that.
And they came in as 50-50 partners, but in order to get funding, any partner over 20% needs to guarantee the loan, and she didn't qualify to be a guarantor, so they had to change her ownership to 19%.
Never mind. I was right. So 20% or more. So they changed it to 19 to fit under the line. Now it's a startup, so that's easy. If you've been in business for a few years, it's harder. Right?
Well, it wasn't exactly a startup. This was an acquisition, and so they had quite a bit of. They were starting out as a new business, and then they were acquiring an existing hospice, and so they had a substantial amount of equity injection. I think $90,000 to purchase the business, and so with that, and we also had to secure her house, and then the bank became uncomfortable and wanted the parents to be guarantors as well and secure.
Bring them in. The bank, these SBA, they wanted to collateralize everybody. We had somebody where they were applying and the bank said, oh, I see this person's got some ownership. Let's put her on. It was the secretary, and they wanted the secretary to guarantee the loan, and we had to fight the bank on that one. So look at this. They're asking for parents.
Misunderstanding on the definition of the word secretary.
You're thinking of one recently. There was one before where they actually, the secretary had 5% ownership. Oh. So they wanted her to collateralize the thing too. So they're habitual guarantee everything people. All right.
So with that, when the documents, obviously we needed the 3-year personal tax returns of the guarantor. They didn't require the tax returns of her parents.
Thank goodness.
But they needed 3 years of her tax return of the 81% owner. We needed the application with a personal financial statement, both people's credit reports, and then we needed the 19% and 81% people, we needed both of their resumes.
Okay, tax returns, personal financial statement, resumes, credit reports. And all of that has got to be good. And then the person with the bad credit, you had to reduce her ownership. So, sometimes there's some of these things take time. This is why some of these deals can take 6 months to fund, right? Like the doctor's office, I had to go through multiple steps, and there's a lot to this. So, all right, and then I remember this deal. We were like a week away from funding, and all of a sudden they came in, and we found out what was the thing that almost killed this deal? There's probably like 10 things almost killed this particular funding, but what was the big one? Tell me about that. The carryback.
Oh, right. The seller had a carryback that was supposed to start, and it was for $10,000 a month, that was supposed to start as soon as funding came, as soon as they got funded. And the bank was not comfortable with that and made them delay the carryback for 2 years until they cash flowed, or if they ever debt serviced below 1.25, the owner had to delay payment as well.
If you don't know what a carryback is, they were buying the business, but they couldn't get a loan for the full price that the seller wanted. So they said, look, I can get a loan for this. The rest of it, can you carry it back? Can you agree to take payments over time? So they made that agreement, but the payments were $10,000 a month, which the banks are looking at cash flow. An extra $10,000 a month, I mean, that's like 5 times what the loan payments are going to be. It's going to blow the deal out of the water.
Right.
So we were able to work with the buyer to get the seller to agree to carry back the carryback, defer for 2 years, right?
Yep.
Yeah, it's a long time.
Yep.
Okay, so, and we got the deal done. Yes, Marcy, we got the deal done. That was a miracle. Oh, that was your client, yeah. So, okay, so we do have some more questions. Mr. Thorpe is asking, my assets are in software. How do I get software appraised as collateral? Does that mean that it's your software that you developed, and so you are the only one to determine, or the market is the only one to determine its real value? Or are you saying you purchased expensive software? I don't know. If you get that question in there, we'll be happy to answer it, but that is starting to get into some tough realms. I don't know. Any ideas on that one? Just guess.
Generally, I would probably look at the cash flow statements or the tax returns to see how much revenue you're actually generating, but for equipment or furniture or fixtures, getting that, it's really going to be more hard assets. If it's a software, that's really more intellectual property.
Yeah, the banks like real estate and money. They want money in a bank account, right? They often do that. Okay, great. So that's some of the personal documents, tax returns, personal financial statement, application, credit report, and then there's business documents that are going to be required. And those are business tax returns, profit and loss statements, year-to-date P&L balance sheet, bank statements from the bank, business debt worksheet, and that's where it starts. Right? And then from there, you don't know where it's going to go, right? You just follow the rabbit, because when the banks get this information, they say, oh, I see this transaction was a bank transfer from that bank account. Let me see that bank account statements. And then they see that bank account and they say, oh, that's from another business. Is that an affiliated business? Give us everything that's ever happened in that business. And then they find out, oh, there's another owner on that business. Give me everything on the other owner on that business.
And then there's a do not disclosure document, and you can't provide it.
Right, or you don't want to, right, which also happens. So there's a lot of different things that can come up, and this is what we're helping people with. And it's really too much to cover on a show, so we won't. But if you have specific questions, feel free to ask them, and we will answer them. Another thing you got to come up with, besides just the documents, is what else?
Money.
Money. How much money do you need if you want to get a loan?
For a startup, you need 20 to 30% injection, and then they don't want to take all of your money, so they want to see some reserves in there for you to live off of while your business goes cash flowing. We'll need some projections, and if there's collateral, for startups particularly, they want to secure the loan.
Okay, so, and this gets a little confusing. It's a question I had a number of times back in the day before I became an old pro, as we all are here. But somebody comes in and they ask for a loan for $1 million, and then we say, well, you got to have 20 to 30% of that, which means they have to have $200,000 to $300,000, which means they're only getting a loan for $700,000. What you want to come in is, say, the project amount. The project requires $1.5 million. I'm putting in $500,000. Or hey, what are some of the ways that people demonstrate the capital injection? Can they use money that they've already put in the business?
Mm-hmm.
How does that work?
You can use that. Excuse me.
Live. You get a dab? Boom.
Sorry, Darren.
Don't mind us. We just broke Darren's eardrums.
Yeah, you can have invoices with canceled checks to show the injection, and you can also have it in their personal financial statement, and you'll have to show your bank statements to show it that way.
So if these women that were opening the hospice had, paid for training for them to be trained to run a hospice within the last 6 months, would that have counted, or does it have to be, it would be more specific, Does it have to be within a year? Does it have to be within 6 months?
It all has to be going towards the business, and so like you can write off your attorney fees. You can, to get the business set up, you can write off. What else did they do?
Check it out.
Acquisition.
You got a gorgeous. Cheers! I'll drink that. Yeah, quality. Yeah, Mr. Thorpe says you're gorgeous. Sweet. Awesome. Come on, you got a gorgeous.
Still got it. Oh my goodness. The injection for this is great. So happy. The injection for buying the license for the business. They had put in a substantial amount of money, and then they had to do the amount that they put into escrow to purchase the business. You can use, they had bought some new computers and things like that, and the minimum amount to be considered is $1,000, but let's say you have 3 different attorney bills, one for $300, one for $300, and one for $400. You can lump them all together. Yeah.
Okay. All right.
One computer for $50 isn't really going to cut it, but if you've got 100 computers, you can lump them all together and do it that way.
This kind of stuff comes up, and this is one of the things we really help people with, is demonstrate the money they've already put in. Because invariably, in our experience, when people come looking for money, they've already used what they have. Maybe they don't have a lot left. I just see it happen way too much. So this is a bit of a struggle. So somebody's asking if you pay the franchise fee, does that count towards the injection? Definitely, if it's recently, and you can show that. But if you're looking to expand an existing franchise, of course, that's different, right? You want to add a second location. I don't know.
I think where people get into trouble, if I can go off on a tangent on this, with business and personal credit cards, is they want to refinance some of the debt that they put on their personal credit card.
That's tough.
That's not really, and it's hard to consider credit card debt as injection because it's just another bank financing the debt. You have to pay that off. So if you're going to do that route, be sure you start your business with a business credit card and only do business debt on it, and then you can list it on the business debt schedule. But if you have debt on your personal credit card, it becomes very hard to rewrite that.
Right, so if you're listening and you're putting business expenses on a personal credit card, first of all, get some business cards. We can help you with that. But if you're using personal cards because you don't have any other options, just make sure you have one card and it's only business expenses. And then keep your personal expenses on another card. Do not mix them up. If you've been mixing them, well, you're not going to be able to write off. I mean, first of all, it's difficult to write off with the IRS. To come in and do an audit, it's going to be ugly. But second, on top of that, just stop and at least put an end date, and then after that, you can start putting it towards the injection. Mm-hmm. Okay, so acquisition, some of the documents we need there is everything related to the acquisition. One of the crazy things, in my opinion, crazy, is people come in, they say, I want to buy this business for $1 million. They say, oh, well, let's see their tax returns. I don't have the tax returns. I just want to buy it for $1 million. If you're going to buy a business, you better darn get the information on this business, real information. You want the bank statements, tax returns, P&L, and when you go to that business owner, he's probably going to say, well, here's the tax returns, but here's what I'm really making. We could never take the what I'm really making to the bank. You can only take the tax returns. So which, by the way, might help you, because if you can go back and say, look, you want $1 million for this business, but the bank will only give you a loan for $500,000, then you can either negotiate the price down, which is a great thing to do, or negotiate some sort of carryback if they absolutely demand the price and you actually think it's worth it. But generally, it's a good chance to negotiate a lower price. All right, so let's talk a little bit about what industries. It's very important for qualifying what industry you're in. And this relates to somebody where we're not ringing the bell. There's no bell in the corner because this is supposed to fund on Friday.
No, it's just...
And all the
work in progress.
Superstition here, you hate talking about a deal. I have found that there's a direct correlation between the number of times I ask about a deal and how likely it is to fund. Like, the more you ask, the less likely it is to fund. Case in point, the $60 million line of credit for the oil and gas industry. I just keep asking.
That deal.
No, you didn't work it, so I can't blame that on you. But here we got, tell us about this daycare deal that you're working on. This one's fresh. This one's in the hopper.
Yeah, and I bring this up only because of the industries and the separation of church and state and literally the separation of church and state.
Yeah. Right.
So the business being purchased had a religious name.
It's a daycare.
It's a daycare, like God something something, and the person buying the business wasn't doing a religious teaching, and so she had to put in her business plan that it was not going to be teaching religion, it wasn't going to be affiliated with religion, and became a few days there where it was like, oh.
I got to say, I'm pretty surprised on this. I totally understand the separation between church and state, but I don't get the idea that if you have a religious school, you cannot get a loan. Or
cannot get loan. You
can't, right? Does that mean that, what's the chicken? What's the...
Chick-fil-A.
Chick-fil-A.
They're not
you can't get a loan for Chick-fil-A?
Religious doctrine at Chick-fil-A.
They're closed on Sundays, right?
So is Hobby Lobby.
Okay. Anyway, so who knows what that line is, but if you have God in your business name, it's going to be real hard to get an SBA loan.
It is.
And if you are religious, you're going to have to lie. Moral conundrum there. Anyway, maybe, I don't know. But just, don't lie, just don't be religious, I guess. Don't believe in God if you want to get a loan from the government.
You also can't be a nonprofit. You can't be another financial institution. You can't be... Darren, next slide. Nope. Okay. And then you can't be a payday lender, and you cannot be investment
a finance
props.
company.
You can't be an investment company.
You can't be us. You can't work with getting people money in any way. Consulting is one thing you can be. If you do those things, but you're also consulting, maybe you're a consulting business.
Right.
That might be
life
a good
insurance
workaround.
company, or speculative businesses such as oil exploration.
Which, by the way, reminds me of a good tip. If you're applying for a bank loan, look at the industry code that your CPA has been putting on your tax returns. You never know, it might be a landmine about to bite you. Because I've seen it happen where the CPA just picked some random industry code because the CPA doesn't really care about your business. They just care about getting the taxes done. And then you go to apply at the bank, and then, look, it happened to us. They had one of our technology companies listed as a direct lender. You go to apply at the bank, and the bank says, you're a direct lender. We can't give you a loan. So, but not just us. I've seen it happen to a lot of people. So look at the industry code your CPA is using. Check with us. You might need to change it now so you can get funded next year. All right, what is the funding process? And we're not going to go over this in too much detail because this is something you could talk about forever. But first of all, just if you are a finance agent with us, the process is simple. Refer people to us, market it through our website. We're going to show you the 4 ways to generate a lead super fast. We're going to do the lightning round ways to generate a lead. But look for people that are in business or buying a business because it's much harder to do startups for term loans. So the first way to generate a lead is just enter it into the system. Go log into the system, go to the input lead tab, put in the information, hit enter, boom, you're done. Now you got a lead in. Second is market with one of your links. And when it gets to the member office who is helping your clients, they will sort through and figure out the best funding possible for them. Just market the links. The link's right on your dashboard. Third way is send in an email, lead@24houраpprovals.com, or if you have an application, send it to btl24hourapprovals.com. And when it comes in, it goes straight to an underwriter, Rhoda, or somebody in her department, who's going to look at it and think of all the amazing reasons this is fundable, right? While the banks typically look at your deal and think, what are all the reasons we can't fund this deal? Rhoda and her team are going to figure out all the reasons we can fund the deal, and we'll work around that. And then the last way to create a lead is just give us a call. Just log into the system. You got your rep there, email, call, whatever. Call us up, and we'll get it in the system. Once you get the lead in, it goes to the member office you work with. They're going to call the client. They're going to consult with them. They're going to look for the landmines, get an application, and get it submitted. And once they get a pre-qual, then somebody in Rhoda and her team will take over and make magic happen, right? The magic. Okay, total funding timeline, 30 days, right?
It's really dependent on the borrower and how quickly they can get documents back. Because once I submit it to a lender, usually I can get a term sheet within a week. And if there are extra documents that are outstanding, how hard is it to get those documents put together? A real estate transaction obviously takes a little bit longer because you have to do an appraisal and surveys, but just a strong business with good cash flow and good credit and collateral, yeah, that would be likely.
Great. 30, but we put 30 to 270 days because and we have people that are getting the money and they're moving into a place. They have to get a certificate of occupancy, or they got to get the landlord to subordinate. There's like a million different things that may make it take more time. And when we give you that number of days, it's from the date that we get that agreement submitted to us. And you go through everything. You go through final underwriting, and then it still takes a darn week to get it funded, right? So what is actually happening potentially this Friday on the daycare deal, and when do they actually get funded? Friday is like the signing. Mm-hmm. So the signing is when the clients sit down and sign final paperwork sent from the bank. Mm-hmm. And then they maybe get funded a week later.
Right, because the originals have to go back to the bank for a review.
It goes through final underwriting like 16 times, is what it feels like to me. Is this one final? This is final underwriting, the sequel. Okay, we got a question here. Joseph is asking, a doctor with no loans and no debt who meets the minimum ideal credit scores, what startup financing options are available, and what are recommendations towards real estate and or construction loan? Okay, well, it really depends on what the doctor's looking to do. Is the doctor looking to do a ground up build on a doctor's office? If it's doctor related, it's super easy. I mean, nothing is super easy. Everyone wants to hit me in the head every time I say something is a slam dunk. But doctors, dentists, veterinarians are the easiest industries in order to get funding for, so that's good. But if it's a doctor and he's looking to get money to build a strip mall, then that is not necessarily a doctor's office, and it goes back to the normal rules of what normal people have to go through. But we do have options that's really probably more than I can answer just in that brief quote. Doctors are great, especially if it's a doctor's office. All right, somebody else. We already answered that one. Yeah, we did. Okay, so when somebody signs up with us for our service, this isn't this doesn't count for everybody else, but somebody comes into us, there is an agreement fee, and then we get money on the back end typically from the bank. The agreement itself is not for the loan, it's for all the other services we do helping the client. Maybe putting together projections, or maybe consult with the client over the course of years once they come in. It's a long-term relationship we have. Remember though, funding is not guaranteed. That's why you don't pay anything in advance. When you come in and Rhoda says, we could do this, she doesn't ask for $10,000. We probably should. Probably should ask for $10,000 right there, but we don't. And everything happens on the back, all right? I think we got another example coming up. All right, let's get into terminology. Terminology, frankly, is my least favorite part of every time we do this show, but it's important, so we're going to knock through some terms, and don't fall asleep. Cash flow analysis. What's a cash flow analysis?
This is the part that I love. This is when I get in the banks or the tax returns, the credit. I look at the cash flow analysis to see how much debt I think that the business can support.
Okay.
So looking at your net, the annual revenue with add backs, and then looking at the debt payments and how all of that is going to work together to piece it.
Right. What it comes down to is they're going to look at your tax returns and look at your net profit. We're going to take your net profit and they're going to divide it by 12. So if it's $120,000 net profit, that's $10,000 net profit per month. That's the amount you have to make your loan payments. And then they're not going to count the whole $10K. They're going to take some portion out, maybe $7. They say, oh, they can afford a monthly payment of $7,000 a month or something like that. So that cash flow analysis is super important. But one of the things is they don't just look at your business, they look at your personal. And why? Because we have some business owners that don't pay themselves for 2 years because they're trying to make the business look good to qualify for the loan. But when the bank looks at the business and then looks at the personal, they say, well, your business has $10,000 in net profit, but you're spending $12,000 a month at home, you actually don't qualify for anything, right?
They look at the global cash flow.
Global cash flow. So they're looking at everything. There's no way to hide. But if alternatively the business has zero net profit, but you're paying yourself $30,000 a month, they will actually count it. So it can go against you or it can help you. Mm-hmm. All right, cash injection. We talked about this a bunch. Anything extra to add on cash injection? Because sometimes it could be things you already paid for.
Yeah, things you can pay for, and it's particularly important for the startup, so that anything less than 2 years in business, they want to see that 20 to 30% injection. With real estate, it can be smaller, as low as 10%, because they have the real estate to secure the loan.
Great. All right, financial projections. It's like creative writing.
Some people don't like it. I do. I think it's kind of fun to go through, particularly if there's an existing P&L, and go through their expenditures and figure out changes that they can make to make the business healthier and make the financial projections and figure out how much growth do they anticipate over the next 2 to 3 years and make it realistic. And sometimes that's really bringing people down to reality. Like they think they're going to be earning $100,000 in the first year of their business, and they're not, and the bank will tell you that it's not realistic too.
Right, so the bank's got to believe the projections. I made the joke about, startups. I do a lot of startup financing, and usually projections are basically creative writing. You're writing a story, and it's often complete fantasy. So we try to bring it down and relate it to things that actually make sense, like any kind of prior history or other businesses in your industry that are around the same age or in the same part of the country.
Right, and banks have databases that they look at to see what that industry is doing in your area and if your projections are on point or not. So.
Yeah, they're not just going to believe whatever you put down.
No, they won't.
All right, a Form 4506. What's a 4506?
A lot of people think that this puts them up for audit against the IRS, but really it's just a verification of the tax forms that the borrower provided or the seller, that they're correct and that all the numbers are correct, and it's what the IRS has on file, and it also helps to see if there are any liens that are unpaid.
All right, when you sign a 4506, you give the bank the right to request your tax returns directly from the government, and they do that. Why? Because they don't trust you. And understandable, there's a lot of fraud out there. The weird thing is I've seen a lot of banks ask for people to sign the 4506, but they don't actually pull it. They keep it on file, and then if something goes wrong, then they pull it. And then if you lied, then you're in bigger trouble. Letter of intent. What is a letter of intent, and when do you get it?
You need that really for an acquisition, and you should be getting that when you're ready to purchase the business, and it outlines kind of the details of the agreement. It can also be...
you always get a letter of intent when you're getting a term loan, SBA, right? At some point in the process, they're going to issue one?
Yeah, from the lender, you can also get a letter of intent versus a commitment letter, and that's a distinction. The commitment letter is more binding. It'll have more details of the loan that you're about to get, and that'll be when you sign it and then you pay a deposit so that they can continue processing the file.
All right. We're always happy when we get the LOIs or the commitment letters.
Mm-hmm.
Okay, landlord subordination. This is one of my favorite things to rant on. But, when you get your business lease, which, by the way, is really a hidden risk, right? You sign for a 5-year lease. That landlord has got basically first rights to all your money if you start missing things. When you want to get a bank loan, the bank says, great, but get the landlord to subordinate behind me because I want access to all your money first. And sometimes it could be a challenge. In our experience, I don't think we've ever had a landlord refuse to subordinate that I can think of. I'm actually surprised. I thought more would.
I think it's more the landlord understanding that when someone goes in to seize the assets of the business, that they're not going to be seizing the landlord's assets, but it's just the assets of the business that they have right to. They're not going to be taking the landlord's desk or chairs. It's just going to be...
Or the building.
Right.
Okay.
It's going to be whatever the business owns or has defaulted on.
All right, term sheet. Who gets a term sheet and when? Is that the same thing as an LOI, or is that a separate thing? Or
It's
is it
more
just
like a commitment letter. Then it lists the conditions of the loan, any outstanding documents that are needed to fund the loan.
Okay, great. I think we're getting near the end here. Boom. All right, last but not least, not a plug, but our service. If you're looking for a loan, go to financeagents.com, fill out the form. We'll review you. Rhoda or somebody on our team will let you know if we believe you qualify, and if you do, you'll get an engagement agreement for some range anywhere from $6,000 to $10,000, depending on a lot of different factors that I won't go over now. And then there's going to be an origination fee that'll come out of the loan that'll come from us on the back. That's what we give for it. And then we start our relationship, right? Mm-hmm. Then we can become best friends with Rhoda. All right, and that's it, except for questions, right? But if it's your first time on the show, please subscribe. We got a lot more awesome stuff going to be coming out over the next month or forever. Every time it's awesome. It just gets more awesome. I can't wait to ring the bell with you. But any more questions? Did we have any more questions that came up at the end? Uh-oh.
It's my first time in your new studio.
Yeah?
So I brought you a present.
Uh-oh.
Thanks for having me.
There's a present? You're giving me a present?
Yeah, thanks for having me. You normally have champagne or vodka or something. It's for all your slam dunks.
It's for my slam dunks. Okay, awesome. I hope you are our next slam dunk. Can I hang this on your chair? All right, cool.
Trash
well,
can.
it's for the trash can?
Well, yeah, you're flipping on
It's the opposite of trash, the slam dunks.
Oh, but see that. It's
All right, let's put it. Cool.
You put it someplace.
Awesome. All right, we'll have to put this up in the studio for all the slam dunks you guys are going to be sending us. And that's it. All right, well, cool. Let's wrap it up for the day. Thank you for the present. My first, get that. You got to blow the ball up.
I tried. That's what I was working on earlier today. It didn't work.
It didn't happen. All right, awesome. Thank you, everybody, for coming on our show. If you got any questions, let us know. Give us a call. If you're one of our agents, thank you for working with us. We look forward to doing a lot more deals together. If you're in the Bankers Marketing Group, hopefully you got something special out of this, that when you go into the bank next time, you understand what are some of the million reasons the banks are turning things down, but you know that we could take it somewhere else and get it funded. That's why it makes sense to go out and do it. Awesome. Rhoda, thanks for coming on to the show and for the gift. Thank you for all you. And that's it. We're out of here. Ding, ding.